In recent years, the travel industry has employed nearly 1 in 11 people in the world's working population today, supporting more than 284 million jobs that have contributed to more than $7.2 trillion to global GDP. But with some pretty obvious events occurring in the world, I don't think that we need to explain what's going on. We realize that the travel industry has essentially come to a screeching halt. We've seen that US demand for domestic flights has dropped nearly 96% last month, and we've seen hotel occupancy rates in the country drop into the single digits for most hotels. So this is a very obvious problem for the travel industry, for many people employed in it. But what we want to do today in this video is specifically look at the finances of the travel industry, because although you may look forward to going to your favorite casino next year or taking your favorite airline to your vacation in 2021, that might not necessarily mean that that company itself is thriving. So as we begin the recovery process, I'm going to tell you now, not every company will survive this. So we'll be taking a look at 4 primary areas in this video. First, we're going to take a look at the cruise industry, look at some of the outlook, some of the numbers, and some of the companies within the cruise industry to get a better understanding of where it stands and where it may be in the coming years. Then we'll take a look at some of the airline stocks. We'll look at some of the ones in America and throughout the world to see how they are faring and where we believe they may be in the future. And then in the latter half of the video, we will discuss some hotels, look at the hotel industry as a whole, and then we will finally discuss casinos and entertainment companies as well. So I think it goes without saying that the cruise industry has arguably been hit the hardest. It was some of the first events in the news that we saw that people were getting trapped on cruise ships, and it created a massive problem for most cruise lines. But now we're looking at the cruise industry and we're realizing that at first we thought maybe a few weeks that these companies weren't going to be able to operate their cruises, and then it turned into a few months. And now I think the major consensus among most people is that arguably for the rest of 2020 and possibly longer, we're not going to see cruises. We're not going to see thousands of people packed onto a ship and then getting trapped on that ship. Now, I don't know about you, but the only thing worse than being quarantined in your apartment, pacing back and forth in circles, is being quarantined below deck on a ship with no windows, being locked in your room for a month. That's what happened to people when they found out that somebody tested positive on a cruise ship. And this happened to a number of people on multiple cruise ships around the world in recent months. Now, this sounds like an absolute nightmare, but this actually was not the first time that something like this happened. See, if we go back in history and we look at previous years, we can see that the cruise industry has been dealing with the problem of viral outbreaks for many, many years. In fact, if we look back just a few years ago, you might remember some of the viral outbreaks of norovirus on some cruise ships where most people on the ship got sick, and it was an absolute nightmare. So I'll be honest, I'm not a big fan of cruises in general, but if we look at the 3 top cruise line companies in the world, we have Royal Caribbean, Norwegian Cruise, and Carnival. Now, these are some of the largest in the world, and we've seen their stock prices drop quite considerably. We've seen them slash nearly 4 times what they were previously. Now, the issue with cruise lines that I sort of have is that the problem is that it's sort of this double whammy. When a company gets beaten down, when they suddenly have no revenue, they still have a lot of bills, they need to pay for it, so they try to raise some money, but that company, maybe it was seen as a very reputable, solid company previously, suddenly if they have no revenue, they are seen as a risky person or a risky entity to lend to. And this is why Norwegian Cruise just raised $675 million junk bonds at a 12.5% coupon rate. This is 12.5%, meaning that this is far higher than if a reputable business, if Apple or Google or Microsoft wanted to issue bonds, they could do this for a couple percent because they're seen as very reputable. The government, they want to issue bonds very, very low rates because they're seen as very unlikely to default on those loans. But a company like Norwegian, where suddenly they need cash, they need to borrow it, now they're looking at 12.5% interest rates. So the biggest mistake that beginner investors are making is they're looking at the cruise industry or some of these other industries, and they're saying that they're looking at the stock price previously, and they're thinking that the demand for cruises will increase in coming years. And let's say that the same amount of people are taking cruises in 2021 or 2022 that they were in previous years, in 2018, 2019. The issue at hand here is that they're most likely going to be less profitable because the money that they are raising at the moment, in this pit right now at the moment that most of these cruise lines are in, the problem here is that they're raising this at extremely high interest rates. And so even if they do see an uptick in the amount of people who are taking those cruises in the future, they're going to be faced with a big problem where they have these high interest debts that they have to pay off. They have to pay off these bonds that are double digits, right? And so this is one of the biggest problems that they're facing. And I think a lot of beginner investors are overlooking that. They're seeing the stock price plummet and they're saying it has to come back because the cruise line industry as a whole will come back in the future. Now, if you get anything out of this video, out of this entire video here today, if you get anything out of it, I want you to understand these next few sentences. That the death of a company does not directly correlate with the death of an industry. See, the cruise industry may be around in 10 years. People will probably be taking cruises in 10 years, in 20 years, probably, right? But that doesn't mean that the cruise lines today will be the ones running those cruises in the future. And so please don't make that mistake of assuming that these companies can't fail because people always want to go on cruises and things are going to get better and these companies are going to be having a great time in the future. That might not necessarily happen. In fact, we just saw that Norwegian has been making a lot of red flags lately, saying, the executives in the company saying that, hey, we might actually go bankrupt. There's a pretty decent chance that we are going to go belly up. And they're making that very clear. Now, is that going to happen? I don't know. If they're able to raise more money, maybe they'll be able to withstand this a little bit longer. But it is an absolutely treacherous situation. And it's the reason why I'm not touching cruise industry. I'm not touching cruise stocks. I don't own any cruise stocks. I'm not shorting them either, but I'm just not touching it. But hey, I'm just a random person on the internet and that's a personal choice. So if you want to invest into the cruise industry, there could be a lot of potential for upside. So don't take that as a prescription for how to invest your money. Now, the next area that we want to touch on is airlines. Now, the thing about airlines that I think is interesting is that there's a lot more necessity to flying than there is with something like cruises. Cruises are for leisure. I don't know that many people who go on cruises for business. It's mostly for leisure. But with airlines, we have a lot of people who are traveling for business. They're traveling to visit their mother. They're traveling to visit their family. And so there's a lot more necessity to airlines that really shows that the airline industry, it's going to be around. It's the way of traveling. We're not going to be going back to taking boats and trains going across America for 3,000 miles. We're going to be flying. Now, the way that the airline industry functions, it's going to change. And I think this is obviously some personal opinions mixed in here, but I think the way that we fly is going to change. See, during any time of crisis, there's going to be a lot of ingenuity, and there's really no silver linings to this event that's occurring at the moment, but there will be a lot of ingenuity in ways that the airline industry starts to reinvent itself to ensure that people have peace of mind when they're flying with them. Because I know last time I was sitting on a plane, this outbreak started to begin, and I'm looking around and there's just hundreds of people so crowded together. They're jamming people together. I mean, my knees are way up against a seat, it's kind of tall and my just slammed up against because they're cramming so many people into a plane. I think this is going to change. Either they're going to have fewer seats on the plane, or we also saw some designs where they potentially will flip the middle seat around so that you're not sitting crunched next to all kinds of people. And we're going to see a lot more masks, a lot more gloves, and a lot more safety precautions being taken by airline companies. Now, one of the biggest concerns for a lot of people at the moment is they just noticed that Warren Buffett, the Oracle of Omaha, one of the greatest investors of all time, sold all of his airline stocks. And this was pretty recent. Now, if you've been following Warren Buffett for some time, you'll know that he's been building up and piling up airline stocks for many, many years, especially in recent years. He's been getting very bullish on airline companies, but he just sold all. He just dipped on the airline industry. And this came as somewhat of a surprise to a number of people. But when this happened, we saw that most airline stocks in America, they dropped double digits, somewhere between 10 and 20% for most stocks in literally a single day just earlier this week. So why did Warren Buffett sell all of his airline stocks? Probably because there is a high level of uncertainty going forward with the airline industry. And as I mentioned earlier, simply because an industry is going to come back in the future does not mean that your favorite companies that you like to fly with are going to be the ones who are taking you on that ride. And it certainly does not mean that those companies are going to be in a profitable position. So to give you a quick little rundown of some of the airline companies in America, we'll go over 4 very briefly. One of them being Delta Airlines, which is in a pretty good position compared to the other airlines. They're still obviously losing a ton of money at the moment because they have almost no customers. I really don't know anybody who's flying right now. And so Delta, they're still burning through somewhere between $50 and $60 million per day, but they have gotten this down about 50% from the amount of money that they were burning before. So they've gotten their cash burn down quite considerably. It's one of their primary focuses. How can they cut expenses as much as possible? Cutting fuel costs, cutting the amount of people that they have employed, furloughing people, and finding other ways to cut as many expenses as possible so that they can hoard as much cash and last as long as this event occurs. Now, I would argue that Delta is probably in a better position than most other airlines. I think their stock price reflects that. If you believe in efficient markets, you'll probably know that the stock price reflects that. They haven't been hit as hard as some of the other airlines, but even with that said, yes, they have been hit quite considerably. Looking at another one that is pretty well positioned out of all airline companies would be something like Southwest Airlines. Now, please keep in mind that, as I just said, markets, if you believe that they're efficient, then this price is already factored in. It's the reason why Southwest Airlines has dropped a lot less than a company like American Airlines, which their balance sheet is in total tatters. American, right? So Southwest Airlines is a company that, if any company is going to survive this recession, if any airline is going to survive, it's probably going to be Southwest. They have a very sizable amount of cash on hand. They're not spending very much cash, and they're likely going to be able to withstand this for the longest. They're going to be able to hold out the longest out of most airlines. Now, that's not a fact, that's not a given, but looking at their balance sheet, it's most likely that they have the best chance of surviving. That doesn't necessarily mean that they have the best chance of thriving long term, and we certainly don't know where the stock price is going to be. So I can't tell you that that's the best stock to buy. I also just don't like giving personal suggestions on what stocks you should be buying because I'm just a random person on the internet. You already knew that. I'm not a financial advisor. I'm just a random guy. So please don't take this as advice. Now, we also have American Airlines. And, I think I said this back in March, but I would not touch American Airlines with a 10-foot pole. There's a reason for this. They have an extremely high amount of debt. They are burning through just stupid amounts of cash on a daily basis, almost $70 million per day. And, to be honest with you, if any airline company fails, I think it's going to be American. That's not to say that you should go and short American Airlines. I don't have any positions in airlines at the moment. Being honest, I don't have any positions in American or any other airline at the moment. But essentially, American Airlines is on life support from the US government. I mean, they have their life alert around their neck and they're just jamming the life alert button, hoping that somebody comes. And then somewhere in the middle, we have United Airlines. They're not as bad as American, but they're certainly not in as good of a position as a company like Southwest. We find them somewhere in the middle from my analysis. But the one thing that concerns me about United Airlines is that historically, United has had most or a good portion of their revenue come from international flights. They've been known as a company that does a lot of international flights compared to something like Southwest, which does a lot of domestic flights. United, they're flying all over the world. They're flying to Asia, they're flying to China, they're flying to Europe. And so I think if anything, if we look at the way that things have been going, we're probably going to see an uptick in domestic travel before people start getting comfortable flying outside of the country or before other countries even allow you to enter into their country. They might totally ban immigration or tourism for some time and possibly for at least the next few months. And so United might be hit harder in that sense, although it's really difficult to actually tell. All right, so let's take a quick look at hotels. Now, I'll be honest with you, I do own Marriott and Hilton stock, but trying to give you an unbiased point here, I think I would argue that hotels, from my perspective, have the best chance for coming back faster than the other areas that we talked about. Cruise lines are essentially dead for the rest of the year at least. Airlines, well, they'll probably see an uptick in people traveling, assuming that countries start to open back up and states start to open back up and things get better. But hotels, I think, have a better chance of opening up a little bit faster. And I'll give you a couple of reasons for this. One of them being that you don't have to necessarily fly or travel in order to go to a hotel. You could drive an hour away to Myrtle Beach or wherever you live in the country, and you could stay at a hotel and you don't have to interact with anybody. You don't have to be trapped in an airplane with hundreds of other people. You don't have to be trapped on a cruise ship with thousands of other people. And it's almost sort of a lot more individual. And you don't have to get in touch with anybody. You don't have to contact anyone. For the most most part. And we've also seen a lot of these companies like Marriott and Hyatt and Hilton really focusing on cleaning very, very much with their hotels, right? And so we saw them really up their game with this. So I think that people, if they're going to be traveling, they're probably going to be just doing some driving to a destination, maybe a couple hours away. They don't want to take a flight. And so they might just start going to hotels in their local area. But also with the looking at the necessity factor, people do need hotels, right? If you have to go travel somewhere, you have to go for business, you have to go for some other reason, hotels are somewhat of a necessity rather than cruises, which are almost entirely leisure. And so with that necessity factor, I think there will be a lot more longevity to something like hotels. Now, there is also the argument that I've heard from a number of people that demand for travel is going to be astronomically high once this pandemic ends. And, you know, I think I have to kind of counter-argue that, because although a lot of people are itching to travel and they want to go, and I've talked to so many people, when you're talking to somebody, the first thing you say is, I can't wait to go travel, I can't wait to go on vacation somewhere. But I think at the end of the day, people are going to look at their finances and they're going to say, well, I haven't been having any work for the past 3 months. I've been out of work. I got laid off. There's 30 million people unemployed in the country. And so there's going to be less money to go around. And so for that reason, I think that traveling as a whole is not going to come back to its 2019 numbers until at least late 2021, probably 2022, until we start to see the amount of people who are traveling to the extent at which they were in previous years. I think it's going to be a lot longer than what some people are making it out to be. That, of course, is once again just an opinion. And we also do have some somewhat relieving numbers that we see coming from China, from the occupancy rates of hotels in mainland China is over 30% on March 28th. So if we get more updated numbers, it's probably a lot higher than 30% for occupancy rates compared to what they were back in February in China, which was about 7% occupancy rates in hotels. So that is somewhat of a relief, seeing that people are starting to travel again in China, and hopefully again at some point in the US once it becomes safe and around the world. Okay, so what's my consensus on all of this? As you probably noticed, I'm really not heavily into travel stocks. Hotels, but even at that, my positions in Marriott and Hilton are not astronomically high. They're rather small. But for the most part, yeah, I'm staying away from cruises almost entirely. Airlines, maybe at some point in the future, but I think there's so much problems. There's a lot of headwinds, okay? So I think from one random person to another that my biggest issue with a lot of these travel companies is there's so much of a lack of data to even begin to look at the fundamentals of the companies. The thing you can do right now is look at the longevity of a company and how much cash they have on hand, how much cash they're burning through, and how long that company is capable of lasting through this situation and this recession that we're in. But even at that, it's so difficult to get numbers on the travel industry. For example, if you're thinking about investing into a travel company 5 years ago, well, you had the data that showed you the previous years of the amount of people who were traveling, the amount of money that they were spending, the projections for the next year. But at this point, there's so many unknowns that I almost feel as though I'm rolling the dice if I go heavily into one of these companies, whether it's airlines, cruises, hotels, casinos, some type of entertainment. But with that said, you know, if you're willing to take a lot more risk, if you're looking to really go big or go home, and potentially very likely go home, then go for it if you'd like to. You know, I just think that there's a lot of concerns that I have overall. I'm focusing more of my assets on different categories outside of travel, and I think we'll be updating that and kind of going more in depth on my portfolio next week. So make sure you subscribe to the channel, drop a like on the video, and I'll see everybody next week.